Good afternoon. My name is Whitney George, and I'm the CEO of Sprott Inc. And what I hope to do fairly quickly today is tell you a little bit about myself, a little bit about Sprott, how Sprott is currently positioned as a company, and then talk a little bit about Sprott Inc. As a security. I've been in the investment business since 1980. I am somewhat of a Warren Buffett value groupie as opposed to a gold bug. Prior to joining Sprott 8.5 years ago, I spent 23 years at Royce & Associates with the founder, Chuck Royce, where I was a portfolio manager, and then the co-chief investment officer, and spent a lot of my time not only managing portfolios, but managing the other portfolio managers, traders, and analysts, which is something I really enjoy. A little bit about Sprott. We offer products that the largest segment of our business is what we call our exchange-listed products business, and there are two components. One is our physical trusts, and the second is our rapidly growing ETF business. In exchange-listed, in the physical trusts, we offer a gold trust, a silver trust. Through the acquisition of the Central Fund in 2018, we have a gold and silver trust. We have a platinum palladium trust. And then most recently, 2 years ago, we bought a C corporation called Uranium Participation Corp and turned it into the Sprott Uranium Trust. The uranium part of our business has been the most rapidly growing, particularly in the last couple of months, and I'll get to that in a bit. The thing about our physical trusts is they were created after the great financial crisis to address investors' issues about counterparty risk that exists within the other ETFs, GLD being obviously the 800-pound gorilla. In the case of our trust, they're closed-end funds that purchase metals, store them in the Royal Canadian Mint. They can be redeemed for delivery of the metals, and they can also create new shares whenever they trade at premiums to their net asset value. So they do tend to hug NAV fairly closely, but they offer security of supply. In addition, they're treated for tax purposes as a closed-end fund, and therefore are eligible for long-term capital gains for longer-term investors. Investors in our funds tend to be investing for the long term, less so trading. They're more liquid vehicles to get gold and silver exposure out there. So they do tend to hold their assets, and we have in the trickier periods here recently been taking market share. In our ETF business, we started with two gold mining ETFs, a senior and a junior. They're factor-based as opposed to market cap weighted, like our largest competitors. And then more recently, first with the acquisition of the North Shore Uranium Miners ETF, we now have the Sprott Uranium Miners ETF. And then earlier this year, we launched 5 additional ETFs to give investors exposure to the emerging energy transition materials market. Basically, decarbonization is going to require a lot of investment. With our mining expertise, we think we can design products that are far better suited for people to participate in mining of what once were base metals, but today we call critical minerals. And finally, the last part of our business is a private lending business where we have very large institutional clients who make private investments in our funds to invest in mining companies, either on a highly collateralized basis, or we also have a product that invests in royalties and streams. We're a publicly traded company listed on both the New York Stock Exchange and the Toronto Stock Exchange. Our culture is about being contrarian, innovative, and aligned. So naturally, we have been contrarian, buying into the precious metals and other mining spaces, which are not on most people's radar screens. We innovate new products with our domain knowledge in the mining space to give investors really better ways to participate in these various mining areas, such as nickel, lithium, junior copper, junior uranium, and then an all-purpose fund, energy transition ETF, which contains all of those, as well as other important materials, cobalt, lithium, nickel, and copper, probably most for batteries, but you get into rare earths for electric motors, for wind turbines and electric vehicles, graphite, again, in batteries, all of these things that most of the world hasn't really paid attention to in decades. At Sprott, one of the things I love about the asset management business is you can have operational leverage without financial leverage that you would find in a bank or even an insurance company. We have a very strong balance sheet, roughly $100 million in cash and securities, mostly invested in our products, our co-investments. That gets back to the final point, which is we are aligned. We own our products corporately. Some of us are the largest individual investors in our own products. And then finally, we have operating leverage to rising metals prices. And again, I think this is some of the appeal of our existing investors is they like the operating leverage embedded in our model. As an asset manager, we're probably not the cheapest, but the asset management business has been struggling and derating because of fee compression, because of passive strategies. Whereas I would liken us more to a royalty company, where people like the operating leverage and the exposure to mining without the operational risk. Franco-Nevada, Wheaton Precious Metals, were we to be valued like them, I think our shares would perform incredibly well. Again, and we have a negative cost of capital when it comes to growing our AUM and our exposures because our clients are paying us fees, as opposed to us raising capital and going out and buying royalties and streams on mining companies. So we're large shareholders. There's about 20% of the company is owned by insiders, and that is after Eric Sprott moved on to do his own investing. And so I think, and we pay a $1 dividend, so with a roughly 3% dividend yield, I think we give people a little bit something to be patient while we wait for what we believe inevitably will be a commodity super cycle driven by the demands of decarbonization and to a certain extent security of supply through deglobalization. So thank you very much for your time today, and look forward to speaking to anybody who would be interested in talking about Sprott further, and would encourage everybody to go to our website at sprott.com to view our product offerings, the extensive content creation that we produce to educate the market. And thank you very much.